Hello, everyone. My name is Adrian, and I am the Education and Community Liaison at the Nanaimo Brain Injury Society. Welcome to our May education session on getting your financial house in order, budgeting and financial planning for caregivers. We actually tried to do this session back in January, but because we hit with that big snowstorm, we had to cancel. So I'm happy to be doing it right now. And with the recent COVID-19 pandemic, we have been given some extensions by the Canada Revenue Agency for our taxes. So it seemed like a good time to do it as well. And I'd like to welcome Nahani Ackroyd here. Hello, Nahani.
Hey, Adrian.
I'll just give you a little bit of information. Nahani Ackroyd is a certified financial planner with Freedom 55. With over 20 years of experience as a trainer and instructor. She is a longtime supporter of MBIS as a volunteer presenter in our education programs and a sponsor for our Helmets for Kids initiative. She is also the recent recipient of the 2019 Canadian Freedom 55 Financial Community Builder Awards. So thank you for joining us, Nahani.
Great, thanks, Adrian.
And take it away.
Okay. So yeah, as Adrian mentioned, Canada Revenue Agency did give us all an extension on getting our taxes filed to June 1st. So don't miss that date if you've taken advantage of the leeway, because benefits and things won't be paid if you don't meet that deadline. So if you get GST money or other kinds of benefits, you want to make sure that you've got your taxes filed so you can take advantage of that. I love doing this presentation. One of the things about brain injury for me is that it really scares me. And so I have huge respect for caregivers and people who are living with brain injury and how you go forward with that. And so my idea with this presentation is to give you a little bit of information, hopefully some tools that will help you dig a little bit more to help you get organized. And so caregivers, you have a huge responsibility, as you know, if you're taking care of anyone. And so part of what you need to do, I think, is take care of your stuff so that if something happens to you, there's a plan for what's going to happen to the person you're taking care of as well. And then normally we're doing this face-to-face, and so we talk about privacy. So I'm just usually say, don't ask questions you don't want everybody to talk about in front of you. So just if you engage with this online afterwards, be really aware of your privacy and what you're sharing online at all times. That's a big part of some things that are going on right now in the world. So typically when I meet with somebody new, we talk about 4 areas to start with. So one is liquidity, which is where are you getting your money from? What's your cash flow? Where is it at? Retirement, what's going to happen when you retire, or are you already retired? What kinds of things do you want to have happen? What happens in the event of sickness or injury? Lots of you are already living with this or you've experienced it. And I hope in some ways that you'll help share the word with other people who either have a disability or who don't. And there are some things that they could do in terms of insurance to help protect them financially if something did happen to them. And then what happens if you die? So in terms of being responsible, we've got to talk about all those areas. It's not fun, but you already have experience with something that most people don't consider fun. So let's take care of things and be responsible. A couple of things that have come up for me I work with clients with a variety of disabilities, and there's real vulnerability to fraud. And so really being aware of protecting yourself from situations, even people who don't have a brain injury, we can fall victim to fraud. The fraudsters are very, very good. And so make sure, sometimes want to have somebody in place who can help you with that. And there's some new regulations coming out. I just got an email before we started this talking about a trusted contact person. So if you're working with somebody like me, is there another person who you trust to help verify things for you? So if you call me and say, hey, I want to take out all my money because I want to go invest in whatever, I can also check in with that other person and say, hey, does this make sense for that person's situation? Because they're a friend or family member who knows you better. So we want to make sure you're protected as much as we can. You also have the right to make whatever decisions you want. So it's a balance in those things. So we won't go into depth about each area, but liquidity and then what happens with a disability are two of the areas I really want to touch on today. So in terms of liquidity, your available cash. I have met often bankruptcy as part of what happens for somebody with a brain injury as well. So making sure you can help protect somebody at the beginning of when something happens so that they don't have to declare bankruptcy at some point along the way is really, really important. So finding a budgeting system, if you're not used to budgeting, to find a way that works. Really work with that. Know what your costs are. What are you spending money on? If you've got debt, know what it's costing you and know how to pay it. Think about, are you wasting money? A lot of people have talked to me recently about, well, now that I'm home all the time, I'm not buying coffees, I'm not buying lunches, I'm not buying dinners, I'm not doing all these things that I know personally I really enjoy doing those things. But wow, I have actually some money in the bank because I'm not spending money on those things. I don't consider it wasted, or I didn't, but now I'm like, okay, yeah, I could pare back for sure. And so also right now under that category, how much do I need? Typical recommendations for emergency funds are 3 to 6 months. And we're finding out now why. This is one of those times when people have an emergency fund, even though, because there is some government money available, but it might not be enough to live on. And it takes a little while for that to kick in. Even with the best intentions, it was still, probably about 3 weeks before any government money was flowing to Canadians who are at home. So making sure you've got a little bit of money on aside so that you can pay for expenses if something happens. And then where else can you find money? If you've already experienced a disability in your family, or if it happens, disability income programs. So Canada Pension Plan, so through CRA, or not through CRA, but Canada Pension Plan. If you've ever worked and paid into Canada Pension Plan, you could have an eligibility for Canada Pension Plan disability as well. It has strict rules about it, so it's kind of a catastrophic disability is how they describe it. So you're not going to recover from it. But if you've paid in, you were working up until your disability happened, you're probably eligible for it. And then income assistance as well, so through the province if you need to. Employer programs, so if you worked for an employer who you paid in and you've got long-term disability through that, you may have a plan that gives you some income for, could be 2 years, could be 5 years, could be until you're 65. And these programs can work together as well, so they kind of layer as well. You could have pension plans from former employers that you may be able to access when something like this has happened. Unclaimed balances. This is one of those weird little things. If you Google unclaimed balances Canada, and if you've got an old bank account that you forgot about and haven't used it, that balance got sent to the Bank of Canada and they have it sitting there for you. So you can look up your name and see if there's any money there. So again, you just Google unclaimed balances Canada, and you can see if you're there. If your name comes up, then you put in a little bit more, you can apply to get that money out. And lottery, inheritance, they happen. I never say to bank on those, right? You never know if you're truly going to inherit what you thought you might inherit. And lottery is gambling, so I don't really encourage that. If it's fun for you to spend a little bit of money on a lottery ticket, that's up to you, but I wouldn't put it as this is my retirement plan or this is where I'm going to get my cash from as a plan. Really, the part that's no fun is sitting down and budgeting and potentially shifting your spending priorities. If you budget, you plan out, here's all the money I've got and here's what my expenses are, and you've got extra, great. You might not have to pinch it all, but maybe you do. And so that's where looking at that. And for the caregivers, this is where it might be if you were a family of 2 adults and now one of you isn't working. Hopefully there's some money flowing for that person, but if there isn't, or even if there is, it might not be enough to run the household with what the caregiver makes at their outside job, but they may have had to take some time off of work to help take care of the person who has the disability. And so we'll talk a little bit about that later, about some options ahead of time for what you can do to help with that. But it can really make money tight for the family if suddenly you've got 2 incomes down to none for any period of time, let alone say if it's 3 or 6 months. And then there's a little bit of money maybe coming from a pension plan somehow or from an employer disability plan. but then what have you done? You might be in a really bad spot at that point. So we want to, as much as possible, protect you and have you set up for success. If something lousy happens, that's kind of our job. And then there's a thing through CRA called the disability tax credit. And it's another way to keep more of your money. So it gives you a credit. It's not going to give you money back, but it's going to help you keep more of your money. This is something, if you're having good conversations with an accountant, they will, and you let them know you have a disability, they will almost 100% say, yes, you need to apply for this. It doesn't necessarily, if you don't make a lot of money, it's not necessarily going to give you a benefit directly, but there's some other things we can do if you have this in place, as well as it can help with medical expenses. If you've had to do things like change things around in the house for adaptations, it can give you, help offset some of those costs or help give you claim those. And it also, if you have a caregiver who's designated, it can also help with their taxes as well. And if you apply for this, it backdates 10 years if you're eligible. And that's just on the form. You click your little box that says, please reassess our tax returns, and it does that for you. So on the form, the first part of it is just you filling out name, address, that kind of information. And then you flip on later on it, you take it to your medical professional, and they fill out their part of it saying why you would qualify for this. And lack of mental function is one of the pieces that can qualify somebody for this. As many of you probably know, you can have a brain injury and be walking around and nobody knows that you have a disability. It's one of those invisible ones. And so you might think, oh, I don't really have something wrong with me, even let alone people around you who don't know you well might go, oh, he or she is fine. And so your accountant might not see that unless you talk to them and really about it, or even your doctor, if you're not having really good conversations with them about, here's what I'm experiencing, and having your caregiver talk to them as well. I took my cat to the vet recently, right? And they're like, hey, I'm good, right? And the cat's dragging herself around the house. She's sick. Take her to the vet and she's like dancing and all happy and good. So sometimes we do that when we go to the doctor. We don't want to bother them, especially right now. People aren't necessarily going to the doctor, apparently. Go to your doctor if you need to go to your doctor, or reach out to them and they'll do a video chat with you or a phone call to assess whether they need to meet with you. There's systems still in place to keep all that moving, to take care of yourself. So rounding back, disability tax credit, really good to apply for. If they say no, they say no. So what? But if they say yes, I've had clients get like $14,000, $15,000 back between the family backdating for this. And if you have children, this helps qualify for a little bit more money for them as well through the Canada Child Tax Benefit, or the CCTB. So the way to get at this, Google disability tax credit, and one of the first links is canada.ca, and then there's a whole bunch of letters after that. So have a look at that. And the form is there as well. It's really only 2 pages. As long as you've been having good conversations with your medical practitioner, it should be relatively straightforward for them to fill this out. And it can even be uploaded online now. So through your MyCRA account, you can upload it. You don't even have to mail it anymore. But you can absolutely mail it as well. It's free to apply. Sometimes your doctor will charge to fill out the form. And if they charge you to fill out the form and you qualify, you can claim that as a medical expense back on your taxes. So definitely worth talking to your accountant about, or your doctor, medical practitioner, or someone like me as well. And a little bit later in the presentation, I'll talk about if you qualify for this, it gives you access to some other programs as well. So what happens in the event of injury or illness? Many of you know this far better than I do because you're living it, but let's talk a little bit about my side's the financial side. So some of you may have been through this. So something happens to you and now you're applying, you're like, where do I get some money? Because now I can't go to work. So you're through your employer, you might have short-term disability or long-term disability. EI, if you've been paying in, now will give you about 19 weeks of benefit. As you know, if you've ever applied for EI, except for currently with the special benefits, it's going to take a month probably before you get any money. So again, that having a little bit of savings on hand to help until any of these kick in. Short-term disability is usually, could be up to 3 months paid through your employer. And then long-term disability is what I mentioned before, where it could be a 2-year benefit, a 5-year benefit, or until you're 65 benefit. Or they may only have long-term disability. And so then you need to self-fund, and usually that waiting period is the same as the EI benefit period. So it's about that 4 months, 19 weeks period in there. Work safe. So if your disability happens while you're at work and on the job site, work safe and is related to an injury on site, work safe may pay some money. The Canada Pension Plan disability benefit, as I mentioned before. So catastrophic and severe is their definition for that. And then provincial disability programs. Now the other thing with all of these is each one of them is funded through a different plan. And so if you're looking at the list, you're like, oh, I wonder who decides if I have a disability. And if you've probably experienced this somewhere. So the Canada Pension Plan disability, somebody who works for the Canada Pension Plan decides if you have a disability. They don't have doctors on staff. They're reading through the applications and they have criteria. EI doesn't have doctors on staff that I know of. WorkSafe probably does. Provincial disability may not. Short-term and long-term disability, if it's through your employer, it's the insurance company's doctor who decides whether you can go back to work or not. So these are all multiple points of potential frustration for you if you have gone through this. It's possible to have your own plan. So personal disability insurance, you pay for it, but if you have a reason why you can't go to work because of a disability, it's your doctor who decides whether you can go back to work, not anybody else's doctor. So it's you talking with your physician and you make a decision about whether you're able to go back to work or not. So that's definitely something you can have in place ahead of time. Most people don't qualify for it as applied for 100%. Most of us have something, and mental health and musculoskeletal situations are the 2 top claim areas for personal disability plans. Personal critical illness insurance is a relatively new insurance product. It's, I don't know, 12, 15 years maybe, which is new in insurance. It pays a lump sum of money tax-free. So if something happens, lump sum, tax-free, here's a bunch of cash. So rather than going on something like GoFundMe and saying, hey, something really awful happened, and trying to get $50, $100 out of your friends and family, if you have this in place, you could get 50,000, 100,000, 3 million of tax-free money dropped on you. You pay for it up front, obviously, but it includes acquired brain injury. So my younger son plays hockey. He plays hockey where you hit, and he was kind of stepping up a level a few years ago. And so I made sure I got this for him. And so it's $100,000 of benefit. He doesn't need the money if something happens to him, at least over short term, but I will not be able to work if I need to go and take care of him. So it at least gives us a cushion to help if something was to happen to him. And for that 100,000, I pay $300 a year. So it's very low cost. For kids, it's very affordable. And for adults, there's lots of things we can do to make sure it's an affordable plan. And unlike life insurance, which helps pays a benefit after you're dead and you don't see any benefit personally, personal disability insurance and critical illness, you can benefit from those directly by having those in place. And then your own personal health benefits as well. So you could have a health plan that gives you medications and things that are paid for. So I always like to include this. David Wilsey, I'm a little bit of an Olympics geek, and he was the captain of the Canadian Paralympic rugby team for many years. If you ever saw the movie Murder Ball, that's the sport that they're talking about. So most of these people who play this can't feel anything from the waist down. And when they're playing, you can tell. So they are all over the place. So this picture is a really good representation of that. And David, before his injury, his mom had gotten him this disability insurance, and he credits her with that because he was playing hockey, a little pickup game of hockey, and hit the boards wrong in his late 20s. And so he really credits having some income from that for life from that disability plan to help him make different choices. So I like to include that, just it's real. Now, if you already have a disability, and you may qualify for the Registered Disability Savings Plan. You might have heard about it. You might have gone, oh, I should probably apply for that. We should probably apply for that. We should probably apply for that. Yes, you should. It's a really good plan. So you have to meet certain criteria. And one is that the person with the disability is a recipient of the disability tax credit. So this is why it's so important to apply for that tax credit. Even if you don't need to pay income tax because your income is low, apply for that tax credit because it can give you access to this program. You need to be a resident of Canada, less than age 60, and really under age 49 is really good for this program, and have a valid social insurance number. So I've included a website here that gives a link to the federal government side of this with the official rules. So the really big picture is there are grants and bonds from the federal government that are available to people who qualify. Potentially, these are retroactive to 2008 when this program started. Those grants and bonds are not available after age 49. So it's meant to be a program where you start drawing on it at age 60. There's some things we can do to play with that a little bit, but you can't get any government money into this plan after age 49. The grants can match at a 3-to-1 ratio, up to $3,500 maximum per year with a $70,000 lifetime limit. And the bonds are only based on income. So if you are low income and you never put a penny into this, we can still potentially get $20,000 for you into this plan that can grow over time. Now, this is where Adrian and I are going to do a little bit of magic. This is an example I have here, but there's a far better spot where we can really put in some actual numbers. There's a great organization in BC called Plan, and we're going to their RDSP section now. Perfect. So it's called rdsp.com, and there's lots of good information there. Part of what you'll see right across the very top here, it says receive $150 free when you open an RDSP for BC residents. So if you open an RDSP account, we get you an account number. Once it starts to fund, then you can apply for this $150 from the Vancouver Foundation. It's super simple to apply for. They send you a check and then you bring it in to put into your RDSP. So Registered Disability Savings Plan. It's for kids or adults. And so you can go to this website, you can play with numbers, and it's, I think, fairly straightforward. So here we're saying we're an individual, family member, personal representative. Current age of our DSP beneficiary. So let's say we're a 40-year-old and we're opening it this year, 2020. Have you qualified for the disability tax credit? So we're going to say yes. And we're going to say that we qualified in from 2015, because you could apply now. And if your physician says that, yes, their injury or their disability started in 2015, then you have that disability tax credit from that date. So we're going to say we started in 2015 and our annual income, let's say $20,000 between different benefit plans that we have. And this is family income. So I'll show you a child example after this as well. But this is an adult who's 40 who is making about $20,000 a year through their different plans. Annual contribution. So let's say, what if you're able to put $100 a month in? So that's $1,200 a year. You're going to save until you're age 49, because the grants and bonds don't come after age 49, so there's not really much point in putting money in past that point. If you're meeting with somebody like me, we're going to do something called a risk tolerance questionnaire, and that will give us how we can invest you. So we're going to say moderate here, so we're not taking on a lot of risk. So the things that have been happening in the market lately aren't really going to bother us at all. And then we're going to say we're not even going to be that aggressive once we're starting to draw on it. We're not going to put in any lump sums of money. We're going to start drawing on money at age 60, and we're not going to do lump sum withdrawals. So there's rules about how much money you can take out each year, and it's called a disability assistance payment that comes out. So there's a certain amount you're allowed to take out based on how much is in the plan and how old you are when you're drawing on it. As you can see, you can go to this and play with it. You can hit print here. You can go to details, and it shows you a ton of information. I'm not going to show you this whole spreadsheet with exactly what happens every year. So you can say here, it says your average annual payment. So that's the money coming out of the plan is going to be $3,832.56. Lifetime payments that are going to go out to this person, our 40-year-old, starting at age 60, are $187,000. $187,000. Now, there's little bits and pieces in here, but what I'm going to skip to is this part, personal contributions. So remember, a person is putting in $100 a month for 10 years, from age 40 to the end of age 49, gets us 10 years that they're putting in $1,200. It's $12,000 that person has put in ever. That's it. The government contributions, the grant matching, is going to be $31,500 over that 10 years. The annual bond is $15,000. So it's $100,000 a year. It's $1,000 per year for up to 20 years. It backdated to 2015. So that gave us 5 years plus it's going forward now for 10 years. So we didn't even get the full amount for that. So we've put in $12,000. Even if it never grew, we've still gotten $46,500 from the government, which sounds pretty good so far, right? Then we invest it and it's growing, and you can see where it starts to really turn into some useful money for people. And so just for fun, I am going to hit this show details. It might be a little bit overwhelming, so don't panic. So it backdates to 35, showing that $100,000 a year that goes in there. LDAP, limited lifetime disability assistance payment. This is where I want to show you now. So we've talked about putting in the $12,000, $100 a month for 10 years. Now at age 60, that payment, first payment that year, $5,786.26. Just make sure we're on the, yeah, $5,786.26. Each year it's going up a little bit in here because they want you to take a little bit more as you're getting older. The idea is you've used up your money. And so then by age 82, this person will have used up their money. But they're getting $10,000, $11,000 in here. And the beautiful part is that current rules, it doesn't affect your other benefits. So it is potentially taxable income, but it doesn't affect your other benefits. So if you know somebody's probably going to be on BC disability payments for the rest of their life, but you're a family member who wants to help them out, if you put $100 a month aside for them, you could give them a little bit extra money to help them in their older years, which can make them a lot more comfortable. So pretty good return on $12,000 in there. And it can be family members who own the plan for somebody as well, or help advise on it. Now, just to make the point even clearer, this can be for kids as well. So what I'm going to do is, what if we have a 5-year-old? We're starting the RDSP this year. They've qualified for the disability tax credit. And let's say they were diagnosed with something, say 2 years ago in 2018. The annual income for them, this means their family income. So let's say, yeah, we're still a lower income family. And that this person is going to have a low income over age 18. But $100 a month is way too much. So, you know what we're going to do is $10 a month. So that's $120 a year that this person is going to put in, or their parent is going to put in, obviously, because it's a child. The parents can turn it over to the child at age 18 if they want, or they can turn it over at some later point, or never turn it over to them. It's kind of up to the family. So we're going to contribute until they're age 49, still invested the same way, no lump sum contributions, still starting at age 60. So now I'm going to go down to that personal contribution section again. At $10 a month for, say, 45 years, $5,400, $5,400 is the only money that's ever been contributed to this by the family. There's grants here. We're still not even maxing out the grants. The bonds, we've gotten the full 20,000. So the total of government money is 36,200. And look at that chart, how it swoops up. Lifetime payments that are going to go to that child, for almost $500,000 from putting in 5,400. So we'll just go over here to see what that actually looks like for them. So that payment column here, the LDAP, at age 60, it's $15,226. You put in 5,400, and even that, just that first payment is 15,226. So this is some, I like this kind of math. There's nothing else I can invest you in that gets this kind of return. And there are far deeper concerns and rules and things about this than I want to get into today. It can work for people who have a limited life expectancy as well. So there's a special set of rules around that section. The big thing is within 10 years of when you plan to use the money, we usually don't want to be putting any money in because the government could claw some of that back that you've put in. So there's a 10-year rule that now has been changed a little bit and is evolving over time. So $5,400 in and over $15,000 a year for that person from age 60 until around age 82. So I like that math. Okay. Thanks. Thanks, Adrian. Do you want to go back to the other, please? Okay, so we'll leave Jack here. We don't need him. And, oh, this is me now. Previous. So why should you have it? And I talked a little bit about these already, but just so it's in black and white. There are strict rules about how the money could come up. So you can't just say at age 60, I want to take all of it out at once. It's meant to be a program that helps protect people who are vulnerable. So to help give them some money into their older years. And then the rules are there about how much can be taken out and how long it's in place. So it doesn't make sense in every case. If you've got a very young person in your family with a limited life expectancy, it may not make sense to do this. But in lots of other cases, it makes a lot of sense to do it. So we're almost at the end. I do just want to talk a little bit about, and this is caregivers and people who have a brain injury. So especially the caregiver though, what I know parents worry about, if it's the parent who's a caregiver or the spouse, what is going to happen to my loved one if something happens to me? And so it's scary, and so we don't want to look at it, but it's far better to look at it, have plans in place, make sure if you don't, the provincial trustee will help. If you don't do anything, the provincial trustee will help. But to make things move smoother and faster for your vulnerable person, having these things in place will make a huge difference. So do you have your will? The will is, what do you want to have happen if you die? So make sure that's in writing. It makes it so much easier for people who are grieving and trying to figure out what's going to happen if it's written down clearly. And then power of attorney and representation agreements. So power of attorney gives someone the right to act for you legally, financially. They could come to someone like me and help with your investments if something's happened to you. They can't change your beneficiaries, but they can help act for you. And then your representation agreement really helps lay out, here's what I want to have happen to me if I'm not health-wise. So if something happens to you and you're not able to say for yourself, hey, don't do that or don't do those things, those decisions are already made in lots of cases. And you've assigned someone who can be your representative, who can say, yeah, you know what, Nahani does not want that to happen. Here's the document that says that. We want to have that. I am not a lawyer, so I can't speak any deeper to this other than that you should have very good, talk to someone and have a good plan in place. So the Canadian Bar Association of British Columbia has really good up-to-date information. It's very easy to read, it's accessible. So cbabc.org for up-to-date information. And these things do change every few years. Plus, if you've gotten married or gotten divorced or had children or someone has died or you've moved from a different province, these documents may or may not still be in force for you at this time. So you always want to, it's good to review them every couple of years and just go, hey, have things changed? Should I update that? Move things around if need be. And so this kind of takes us to the end. So we always like to look at a full plan. So liquidity, where are you getting money from? So sometimes when I'm sitting with someone who's experienced a disability, we go through what are all the things that you have, what's going on? Have you tried this employer? Have you tried that employer? What has happened? Did WorkSafe come up with any money? All those kind of things. Retirement, we didn't really get into here. I love talking about retirement, but it would have gone way too long. So we'll just keep that for another time. And then what happens in the event of sickness or injury? And as lots of you have experience with that, we really want to protect you from bankruptcy and fraud in that as well, but also set up people around you to help take care of things so they go, oh, you know what? Yeah, there was a lot of financial impact when that happened. So what can we do to help make sure that we have some money if that happens to us? And then what do you want to have happen if you die? Well, when. We know that's going to happen. So having things in place, we just don't know when usually. So making sure you've got those in place. So what should you do now? And this is where take action. We've all had a lot more time maybe to think about this than we should have. Apparently the lawyers and notaries have been really busy doing wills and power of attorneys over the last little while, from a distance, of course. So review your situation, really look at it, get honest with yourself, talk to relevant family members or friends, your trusted contact person, and go, hey, here's what's going on, here's what's happening. I hear stories sometimes where somebody has left things to people by naming beneficiaries, but didn't on their, say, on investments, but didn't actually lay out a will. And so now people are stuck trying to figure out what to do. Seek help or advice if you need it. So from a lawyer, an accountant, someone like me, certified financial planner, get that advice if you need. Protect your family and your wealth through risk management and take action. Lots of times we think about these things, we attend a webinar because we've all done lots of those lately, and then it's like, oh, that was interesting, right? And we kind of let it slide for a little while. So I really encourage you to do something about that. Set a time frame for yourself to go, hey, you know what, I really need to look at this, and set that up for yourself. And so there's a little bit about me. I get asked, what does it cost to meet with me? So if you have been part of Nanaimo Brain Injury Society, you've watched this presentation through this, it costs nothing. I'd really rather you asked me the questions. And often there's no ongoing business for me. It might be a referral to someone else, or it might be just, hey, let's get your budget kind of organized. See if there's anything there that I see that's different from what you see. And then off you go. So it really depends on each person's situation, or it might be applying for the Registered Disability Savings Plan and getting that started for somebody. So as part of my support for Nanaimo Brain Injury Society, it's free to call me, contact me and say, hey, email me, whatever, right? And say, hey, saw your presentation. I'm wondering about this and this. Is it possible to do a phone call and talk about it? Or once we're able to meet face to face. And that is it for today. Thanks, Adrienne.
Thank you. I always find the information you give so informative, and I'm glad it's a nice reminder for things that, that we need to do, and sometimes they just get put off and put off. But thank you for joining us again. I think this is a great presentation to have at this time. I think people can reach out and contact you and if they have questions, and it's a good time because we have that extension from Canada Revenue Agency. I'm also just going to remind you that although our physical office is closed, NBIS is still available. Our regular hours from Monday to Thursday, 9 to 4. Feel free to reach out through email or phone, or check out our website, nbis.ca. And we will see you next month. Thanks for having us.
Great. Bye, Adrienne.
Bye.